good evening, it is to viewers. Welcome to Equity News on Equity Access, your aerial perspective of stock market developments and of developments in the Zimbabwean economy. Thank you for joining us as we broadcast live from our Hampton studios in Harare. I'm Ibn Mabunda. Let's get on to business. On news tonight, Vice President Constantino GDN CHIWENGA has declared war on what he termed financial terrorists. This he expressed while addressing a business audience at the 60th edition of ZITF, the Zimbabwe International Trade Fair in Bulawayo. Vice President alleges that some businesses are sabotaging the progress of the economy. Let's have a look.
And we would want to make this warning today. Those who are doing this exercise, we already know. And if one tries to fight and practice financial terrorism on Zimbabwe, we will react appropriately. And no one should cry that he has not been treated fairly. We have given, last year you wrote to me in November that you wanted this inter-bank, and in December last year I met the business in Rainbow Towers together with the Minister of Finance, and we said, but why ambushing us? We thought we were going to come and then explain, but nevertheless, we were quick enough, and by February you were granted. But now, it has gone upside down. Others coming to say, we will make sure this will work, will not work. No, it will work, you will not work. Simple.
Well, a total of 532 direct local exhibitors and 16 foreign nations are participating in what has been described as a historic trade fair. The exhibition space taken at this year's ZITF rose from 47,600 square meters in 2016 to 57,700 square meters recorded this year. For the first time in the history of the Trade Fair Showcase, the exhibition space has been sold out. The Minister of Finance, Professor Mthuli Ncube, also gave a speech highlighting the imperative need for government to repay foreign debts owed to the World Bank as well as the International Monetary Fund. Again, let's have a look.
You like T-bills too much. So when banks are trading with each other, you often hear, oh, do you have T-bills as collateral? Everyone wants T-bills as collateral. You must trust each other and reduce your desire to use T-bills as collateral. It's also not very good banking, but there it is. It's easy banking. Let me press on. Where are we now? Options for arrears clearance. How did I get there so far without talking about monetary reforms? Let me talk about monetary reforms, then I talk about arrears clearance. Now, colleagues, you asked for an interbank market. We introduced that. That was after the separation of accounts in October, 1st of October, FCA and RTGS accounts. Please, as I said earlier, use the market. It's for you. Our job is to protect it by making sure that the fundamentals stay strong. Fiscal side, money supply growth, we'll put all the infrastructure we need to make it work, but your job is to really stop using the parallel market and use the interbank market, as the Vice President has already said. Now, so now let me go back to arrears clearance. I've said enough about the. You see, colleagues, one of the things we need to do, and this is highlighted in the TSP, is re-engagement. Re-engagement also means clearing our arrears with the African Development Bank and the World Bank. We have lost about 80 different credit lines because we haven't cleared our arrears, also because of partly sanctions. If we look at it, it's really not that, it's not the government that needs money, that needs offshore lines. It is you, the private sector. We're running a surplus. We're running a surplus. So it's you who need funding. So we're fighting for you. Arrears clearance are for you. So if we clear our arrears, suddenly the World Bank and the IMF, they're called what you call preferred creditors. So if you owe the money, you're in trouble. You can't borrow from anyone else. So if we clear those arrears, then you can borrow as much as you're able to take on once we've cleared those arrears. So we're working on a plan for that. But that plan also involves us taking on a staff monitored program. This is already in the media, so I can say it, which we've done. So things went very well in Washington. Where, we know the roadmap towards that, and we'll work our way through it. Then eventually we'll clear our arrears. I'm determined that we do so that you can access your credit lines. But also in the interim, we're not just waiting for this to happen. We're doing other things. We're also raising other we're looking at other credit lines through South Africa, through Botswana, all manner of structures that we're working on, through China. And this morning, in fact, last night, you like T-bills too much. So when
a deal worth over $5 billion with Chinese steel giant Tsingshan for the setting up of steel plant in Mvuma, as well as for the bankrolling of a number of mining projects. This is the largest deal announced by government since 2009. This follows the Karo Resources $4.3 billion deal signed recently, plus the Great Dyke Chinese and Russian $3 billion deal of 2014. Notably, however, is the fact that none of the previously signed deals have materialized to date. Of note as well is the fact that this deal has been on the table for a period of about a year. Mines and Mining Development Minister Honorable Winston Chitando said the first phase of investment will see the injection of $2 billion for the construction of a 600 megawatt power plant, lithium mining and value addition, as well as the revamp of the national railway system. Let's have a look.
Understanding as follows. One, the initial memorandum of understanding was targeted at the production of ferrochrome specific for the consumption in the Mvuma area, which is about 550,000 tons of ferrochrome. But at the moment, it's targeting a production of 1 million, which means the consumption in Mvuma and some of it for export. And secondly, the initial memorandum of understanding targeted the production of coke specific for the operation in the stainless steel operation in the Mvuma area, but now it's targeting the consumption in Mvuma as well as production of coke for exports to other operations with Tsingshan worldwide. In addition to the coke, to the conversion of coking coal to coke, the memorandum of understanding also provides for the research for Tsingshan to produce chemicals from part of the coal which will be produced in the Wambe area. And also, the memorandum of understanding provides for the construction of a 600 megawatt power plant in 2 phases. Initially, and immediately 300 megawatts, and this is the second phase, another 300 megawatts. The memorandum of understanding also includes the provision of lithium concessions on which Tsingshan will undertake mining of lithium and also value addition. Not in mind that they are also in the battery space, nickel battery space, nickel-lead battery space in Indonesia. Last but not least, Your Excellency, the memorandum of understanding also includes Tsingshan looking to the possibility of working with government and other investors in exploring the upgrading of the railway line to the port or construction of a new railway line, whichever will be established to be more economically feasible. And also establishment of a dedicated port along the coast, which will handle the understanding as follows.
Leading gas and welding products supplier BOC Gases Zimbabwe has issued a statement to its customers indicating challenges in securing supplies from its supplier, who is now going under judicial management. The only calcium carbide supplier in Africa, SA Calcium Carbide, is going into business rescue and subsequently shutting down their operations. This will result in BOC Gases unable to service its customers. BOC Gases will experience a complete product range outage within the next couple of days. Alarming. BOC Gases has instigated emergency sourcing of backup raw material from alternative international sources. Meanwhile, this will have a significant impact on lead time and cost. BOC Gases is expecting the situation to last until at least the end of June. This is definitely going to have an impact in terms of our mining as well as our manufacturing in the country. In other business news, ZSE listed blue chip Delta Corporation has released quarterly results for the fourth quarter to 31 March 2019. In a trading update, the lager beer volume declined by 3% in comparison to 2% in the prior year and grew by 5% for the full year. The group revenue will reflect an increase of 33% for the quarter and 26% for the full year. National Breweries PLC, which is of course the Zambian wing of the corporation, recorded a volume decline of 24% for the quarter and is flat on prior year for the 12 months. The sparkling beverages business was virtually closed during the quarter due to non-availability of imported materials. Volume declining by 89% compared to prior year for the quarter and decreased by 44% for the full year. Delta has a 65% market share on the local beverages front. Let's just get into the stats so that you get a historical perspective of how the corporation has performed over the past years. This, of course, would be the half year. Now, in 2015, they recorded revenue of $291 million versus a profit after tax of $43 million, taking a decline in 2016 as well as 2017. Then they register a growth in profit after tax for the half year 2018, where they did record $32 million in profit after tax against a growth in revenue to $250 million. For the half year to 2019, there is that significant jump to $341 million in as far as revenue is concerned, while also there has been a record of $57 million with regards to profit after tax, as well as an increase in terms of the operating profit in that regard. Moving on to other stories, Net1 has hiked its data tariffs by 83%. This comes into effect from the 25th of April 2019. This, of course, would be the presentation of the statement, the public notice that has just been released by the network provider. In terms of what this means, one RTGS dollar will now get you just 42 megabytes of daily bundles from 250 megabytes before. Net1 has a subscriber base of 2.1 million members and has the fastest growing mobile subscriber base. This becomes the second mobile operator after Econet increased its voice calls by 31% in as far as the tariffs there a fortnight ago. This as mobile operators seek to adjust as well as keep up with inflation in the economy, which now stands at 66.8%. Then moving right on to the tobacco statistics. Well, this, of course, in terms of the mass sold in kilograms would be the total for auction. That would be 4.9 million kilograms against total contract 17 million, giving us a total of 22 million kilograms against 44 million kilograms recorded in the 2018 season, which of course there would be a 49.74% decline. Then moving on to the value, total value up to this point is 38 million against 124 million dollars recorded in 2018, which is of course a 69% decline on a year-to-year basis. This concludes our news segment for tonight. Up next is the news review, and joining me for that conversation is our investment analyst Tinashe Kanduo. Please stay tuned. Welcome back, viewers. Tinashe, good evening and welcome to the show.
Thank you, Ben. Good evening.
Fantastic. Let's get the ball rolling. The Honorable Minister of Finance, Professor Mthuli Ncube, calling for government to take the initiative to repay foreign debt, particularly the Paris Club. What is your take where that is concerned?
You know, repayment of foreign debt is actually critical in terms of the re-engagement initiative. The private sector is actually carrying a lot of burden when it comes to government debt. High government debt and these areas, it actually means that the private sector is not able to negotiate, the cheaper lines of credit. These debt overhang is adding to our high risk profile. So if the government is able to repay this, the foreign debt, it will actually be able to aid, our private sector and even other concerned investors to come in Zimbabwe. It actually reduces our risk profile. It's actually a positive initiative, especially from the finance minister, and yes, actually to pursue that policy stance. We have to repay the debt, and we should be a nation which should be known in terms of honoring up with debt.
But on the one hand, you have him speaking about us having the need to pay, but in his budget, we don't see that much of an expression in that regard.
You see, if you look at our budget per se, you are seeing we are in an economy which is depressed in terms of our domestic capacity, even to meet our domestic needs. So paying debts, sometimes it becomes secondary, but it's something that has to be primary in terms of government's policy priority. I thought maybe when the minister, increased or introduced that 2% tax, the excess that we are getting in terms of, the excess revenue, that excess that we are getting, if the minister really wants to repay the debt, maybe should you channel those funds towards the repayment of those areas.
Okay, now government signing a deal with $5 billion with Chinese giant Tsingshan. What is the relevance of that?
It's very significant to this economy, especially considering that this is a deal for steel. When you want to resuscitate your manufacturing sector, it won't happen when you don't have, a vibrant steel industry. We used to have Cisco Steel, which was the sole producer of steel in Africa, but it was affected due to this economic downturn. So this coming on board of a new player in that sector, it actually helps even in attracting other investors as well. But the unfortunate part is we have celebrated so many deals that have been signed before. You look at the Darendale deal with the Russians consortium, and you look at even the Africa's richest man, the Dangote. He came and even signed a couple of deals here, but we haven't seen any deal that has been fruitful. So if you look at it, The major maybe stumbling block is the funding aspect or even policy inconsistencies. So I recommend, or I would want the government, maybe especially the responsible minister who is responsible for your industry and commerce, to be proactive in making sure that he makes some follow-ups to those deals such that they will materialize.
Okay, but let's talk about the effectiveness, or should I say the effectiveness of our policies with regards to facilitating these deals, because I think you just mentioned that maybe we would need to make some adjustments. But question is, what can we expect given that we've got this deal actually on the table?
You know what, Iban, if you look at in terms of our policy formulations and implementations, initially we had the indigenization and empowerment policy, which was being said to be a hindrance towards attracting investment. It actually was a stumbling block to fulfillment of certain deals. But if you look at it, that policy was repealed, but I haven't seen to date, a gazetted policy to say that that policy has actually been lifted. So you see, on the other hand, yes, we may pronounce that we have lifted certain policies, but we don't put them into writing. So that's one of the aspects that the government has to improve. Then also in terms of negotiating these deals, some of those deals, they don't have, the financing backing. I can give you an example of the Darwin deal, platinum deal, where we were saying the Russians will be investing 3 billion in that platinum mining deal. But if you look at it, there was no funds that came through from Russia, and they were now negotiating with Afrexim Bank for funding. So that's where the government is lagging behind, or is lacking. Yes, they should actually make sure that each and every deal they sign, there is actually a proper funding arrangement to it.
Okay. Now, BOC Gas Zimbabwe says that they are sole provider of calcium carbide, which is SA calcium carbide is actually getting to be under judicial management, and as a result, it will then also not be able to supply them with the necessary inputs to actually supply the nation with gas. What is the relevance of that?
If you look at the calcium carbide company, the South African calcium carbide, is actually the sole producer of that key input to those who are into the welding and gas industry. And our gas industry is very much important, especially in the manufacturing of automotives and even the mining sector as well. So the major player or the sole supplier in Africa, if he's experiencing such difficulties, it means that there will be actually a huge supply bottleneck, which will have a negative impact to our automotive and the mineral and the mining industry. So, but on a positive note, BOC Gases is actually saying that it is looking to other suppliers even beyond the region. But if you look at the setup of our economy, where we have serious foreign currency challenges and all these high perceived country risk, it's actually a challenge even for BOC Gases to have a good deal with another supplier.
Yeah, that's on the one hand, yes, with regards to access to the forex, but also another factor that I think we need to be conscious of is the fact that we could look forward to increased cost of production in the economy.
Yes, indeed, yes.
Because look, now that they have to import the raw materials that we need, this definitely means that their cost of supplying increases, and they pass that on to the manufacturer, who in turn passes that on to the consumer. So I think we can look forward to increases in prices across the board. So this spells out inflation. And let's move on to Delta. They've released their quarterly results, and they're of course explaining how that they've taken a knock-on effect of the 2% tax that has been introduced by the finance minister, as well as shortage of raw materials, as they couldn't actually access the forex to access what they actually need to put into production. Just for information's sake, they recovered $7 million in terms of imports per month. So of course they've explained how their volumes have actually taken on a decline in that regard. Can you shed more light where this is concerned?
Of significance is the depressed or the the knock on volumes. This speaks, to your depressed demand, and also speaks to the impact that the 2% tax is having on consumer spending. Increased taxation, it means there will be your disposable income will be reduced. So you are seeing that individuals, especially in the last quarter, up to March 2019, people were now spending less on alcohol. And then also, if you look at the sparkling beverages segment, Delta is saying that segment was actually closed over that month, over that quarter, due to issues to do with foreign currency shortages and access to raw materials. If you look at the sparkling beverages segment of Delta, it relies much on imported raw materials. So the country has been experiencing acute shortages of forex, which haven't actually improved despite the interbank market. So these are actually the challenges in the economy, and it will have a persistent negative impact to volumes for Delta performance.
Okay, I look forward. I know we'll discuss this in more detail when the full year results are actually published. This, of course, is a quarterly.
Maybe to add on to that, this for the full year, we might not see a drop in revenue. Maybe the revenue line will be supported, by these currency distortions that happened between October to March. They might support, the increase in revenue, and also these hikes in prices might also even support, the revenue performance of Delta. But the key aspect to look at is the performance of the volumes that will speak, to the aggregate demand in the economy.
Okay. Net one hikes tariffs by 83%.
That's the message in the economy. Everyone is increasing prices, from services to even suppliers of, your real goods and services. If we look at the telecoms industry, we are actually expecting to see increases in tariffs, but the 83% hike in tariffs makes Zimbabwe one of the most expensive, data in Africa. When you compare to Zambia, for instance, their 10 gig data, it costs something equivalent to $10 US. But with Net One's data, it means that for your 2.5 gig data, it's now costing more than $10 US.
Okay, so this obviously would increase the cost of doing business.
It actually increases the cost of doing business, and you might also see even usage of data usage taking a knock due to increase in prices. Maybe it will also limit, Net One's expansion drive. So
now with increased cost of doing business from gas, increased cost of business from the tariffs, and about a fortnight ago we saw Econet raising their voice calls tariffs by 30%. This definitely speaks into our inflation. Now let's talk about tobacco. Tobacco is often comes in as our savior when we have crises in terms of economic stability. Can we talk about the volumes that we have actually seen recorded in the period in question, as well as the significance and overall bearing that would have on the economy?
Just like what we discussed yesterday, we have seen a slow start in terms of the tobacco marketing season. Deliveries have been slow due to all those sticking issues that were in the sector. But also to note, the 2018 farming season wasn't a good season, especially for the whole of the southern African region. We experienced an El Nino induced drought. Then during the harvesting period, we had some floods in certain areas. So farmers actually suffered, post-harvest losses, and also some losses even during the farming season. So this now speaks to your depressed, your volumes, which you are seeing that in total for the 2019 farming season so far, only 22.5 million kgs have been delivered when compared to 44.6 million kgs same period last year. Prices have also been depressed as well, and some they are saying merchants they are colluding with other merchants to lower prices. Some are also blaming our government that the tobacco money was actually forward sold and was used before reaching to the farmers. So these are the issues in the sector, and they are also speak to the overall performance of the economy. When an economy is suffering, each and every sector tend to suffer as well.
Well, thank you, Tinashe, for the perspective. Thank you, viewers. Please stay with us. Up next is Markets Daily. Welcome back, viewers. It's time for Markets Daily, and with me in set is Anezu Chumbomani. So good evening and welcome to the show.
Thank you, Eben. How are you doing today?
Fantastic. Yourself?
I'm good. Can't complain.
Beautiful. Let's get on to business.
All right. We are 74 days into trading this year now. And fun fact is today was the most active day on the stock exchange in the year 2019, accounting for about 36 counters that exchanged hands. Within those 36, we had about 16 bulls and a slew of bears that came up to 13. Now, just to have a closer look and glimpse of what the stock market did present today, as evidenced by a larger herd of bears versus the slew herd of bulls versus the slew of bears. There was a show of a 0.16% increment in the top 10 index for it to settle at 120.56 points, while the all-share index did mimic again the industrials index, coming up 0.38% for both of these indices to settle at 127 and 423.91. Now, the mining's index was stable for the past three sessions. It did come up by an inch, accounting for about 0.05% for it to settle at 186.88. Bindra nickel was pretty much consequent to that movement. Now, top 10 index seemed to be a weaker index today, with it splitting four laggards and five risers in that index. Just to mention, Delta did release a quarterly set of results today, while Citgo International, Old Mutual did continue on their rising trend, with Old Mutual adding about 4.14%. Padenka did add 0.18%. Padenga and Old Mutual are now the only two counters that are in the green on a year-to-date basis, which shows good movement in terms of the top 10 index, which we have recently been talking about, saying that these counters are the reason for the increment in the ZEC stock in the ZEC. Now the ZEC has a characteristic of a lot of investors coming in on the basis that they are trying to find a movement out of the Zim market via some top 10 indexes, top 10 index counters, which are your Old Mutual and your Silco. Padenga, which also has a foreign currency earning ability, is also a reason amongst those. Now, which pretty much puts the top 10 index 1.13% ahead on a 5-day trend basis, while the minings index, even though the line is green, there is still down 2.78% on a 5-day trend, basically because of how stable it has been, and the increment of today is not higher than the last week's level of the minings index. Moving on to our rises and fallers, Zim Papers did lead the herd of bulls, coming up 20%, while on the other end of the yardstick was NTS, National Tire Services, down 19.91% to about 1.73 cents, while Mash Holdings and Lafarge did follow did actually follow that trend, coming off 19.67% for it to settle 2.41 cents, while Lafarge settled at 110 cents, letting up about 17.29 cents. Capping the top 5 risers was Hippo Valley Estates, coming up 5.88%. And then if we just have a look at our interbank rate and Old Mutual implied rate, as well as our parallel market, basically the forex market, the forex market did soften. The parallel market did strengthen today, pretty much because of how the exchange rates had weakened very enormously just before the Easter holiday and during that holiday. Now that holiday pretty much could have been the cause for that inflated price of the US dollar, but now it has cooled off today, coming out of the holiday, coming back to about 4.7. Yesterday it did register 4.8 for that particular day, coming up from about 4.6, 4.5 before the holiday did start. The Old Mutual implied rates did strengthen, with the ZSE coming up, while the JSE counter coming off almost 2% today, and the interbank rate has continued on its weakening trend.
Of note, honest, is the fact that with each day that passes, it seems as though the whole convergence theory seems very much elusive, because from where we are coming from, you check the trend, you look at the gap between the parallel market rate against what we have playing out on the interbank market rate. There seems not to be any congruence whatsoever. It remains to be seen whether the prophecy said by government that there will be convergence will be established. Well, thank you, Anissa, for the perspectives, and thank you, viewers, for staying with us. That's it from the Equity Access team tonight. Dankie and good evening.